Budget 2024 is just about a week away, and the run-up to the budget is often an exciting period for individual taxpayers as well as the corporates as they look forward to this annual exercise that happens with hopes of a tax, sops as well as rate cuts is what they're expecting or have on their mind. So what would Finance Minister Nirmala Sitharaman's Bahi Khata have in store for us? To discuss individual taxpayers' budget wish list, I have with me today Preeti Kulkarni from Money Control's personal finance team joining us. Preeti, thanks so much for speaking with us. Well, let me first up get to what can we expect from Budget 2024. The last one, well, this is the last one ahead of the general election, so we could have some kind of announcement. But individual taxpayers and income tax, could we see some kind of changes come around there?
So, Stacey, as you know, in December, Finance Minister Nirmala Sitharaman had already said that no spectacular announcement should be expected as this is just a vote on account. But if you recall, in 2019, the then interim Finance Minister Piyush Goyal presented the interim budget and he did announce certain key measures, the chief one being the tax rebate on incomes of up to Rs 5 lakh. So in this backdrop, some taxpayers and some tax experts are still holding out the hope that taxpayer-friendly measures could be announced. So their wish list includes an increase in standard deduction, which is available to salaried taxpayers from Rs 50,000 to 60,000 or even 75,000, and also an enhancement in the basic exemption limit under both the tax regimes, the new and the old. So this will account for the inflation that we have seen. And one issue that came up during our discussions with chartered accountants is that the deduction of up to Rs 2 lakh on home loan interest, this is acting as a key hurdle in the path of the switch to the new regime. So many people have already taken housing loans and they are enjoying the tax break on interest paid. So even if they find the new regime simpler, it is simpler, this reduction tilts the scales in favor of the old with exemptions regime. So this is why some feel that the tax deduction on home loan interest should also be extended to the new tax regime.
Right.
But at the same time, there are others who feel that the government now is already looking past the old tax regime. And several changes under the new regime were already announced last year, increase in basic exemption limit, tax slabs and so on. So this year, in fact, there is no need for any changes and in fact, they would welcome stability in tax rates, rules and structure.
Right. You did mention stability, but there's always that hope that there could be some bit of change. One other term that often comes up in our discussion is that of long-term capital gains tax. There hasn't been much that has come on that front. Could we expect something to hear from Nirmala Sitharaman this time around?
See, last year, in fact, non-equity funds, that is funds with less than 35% of their assets in equities, lost the long-term capital tax gains advantage and indexation benefits. Now, at the moment, all capital gains on such schemes are added to taxpayers' income and taxed accordingly as per the slab rate. So this has had an adverse impact on debt funds inflow. So the industry, the mutual fund industry feels that the indexation benefit should be restored. Also, different asset classes such as equity, debt and property have different capital gain tax rules. So simplification of these rules is also on taxpayers' wish list this time.
Right. So, of course, we hope to hear some bit of simplification and I'll get to that details because there have been different quarters that have been asking for different kind of, compliance made easier or simplification. But before that, let's get to a particular class, and that I'm talking about is senior citizens, because there's often they are considered when this whole budget exercise takes place. So what are they hoping or what are you hearing on ground from, the senior citizens of our country?
Well, like every year, they too have a wish list ready. And one of the long-standing demands that has been around for a long time is around medical expenses. Now, senior citizens, that is people over the age of 60 years, can claim tax reduction of up to Rs 50,000 under Section 80D on health insurance premiums paid. And if their children are paying those premiums, then they can also avail of this tax concession. And if senior citizens do not have a health insurance policy, then they or their children, for that matter, can claim a similar deduction on medical expenses that they have incurred as well. Now, there should be no reason why they can either claim tax reductions on premiums or medical expenses. Ideally, it should be both. As we know, health insurance policies cover hospitalization and daycare procedures, of course, and not routine medical expenses, pharmacy bills, and which is why both should be allowed. And that apart, insurers and also financial advisors we've spoken to feel that the deduction under Section 80D should be raised to rupees 1 lakh, particularly for senior citizens from 50,000 to 1 lakh. Because post-COVID, health insurance premiums have shot up. And because healthcare costs, as we know, have gone up as well. And many individuals, and in particular senior citizens, have seen premium hikes of over 15 to 30%,
Right.
some even more. And then there are others who have voluntarily enhanced their health insurance covers, which again means that their premium outgo is now higher, and 50,000 is just not enough.
Right. So we can keep our fingers crossed to hear something, at least for senior citizens, if that limit is raised to about 1 lakh is what
Under the old
is
tax
on
regime.
the, yeah, correct. Under the old tax regime, what we're hoping for is from 50,000 to that medical expense at least be increased to 1 lakh rupees. Well, like I was saying, we were talking about simplifying a couple of tax rules that are there, or at least getting the procedures and compliance that has been a headache. What can we expect on those lines?
Well, this is an item on the wish list that could actually find a place in the interim budget. Because simplifying and streamlining procedures and eliminating hiccups will not have revenue implications as such for the government. So one example pertains to the issues that NRIs have been facing since last year. Now, many were unable to file income tax returns on time due to inoperative bans. But while the income tax department issued clarifications and did spell out the detailed procedure to update their residential statuses and to resolve the deadlock, some hiccups still remain. In the case of many NRIs, even now, tax refunds are still stuck. Instead of having to reach out to the local income tax offices, tax experts feel that the government should put in place a process which allows NRIs to upload their address and citizenship proofs online to complete the tax filing and tax refund process. And in addition, they feel that the government should also enable e-verification of tax returns through foreign mobile numbers, tax payment without Indian bank accounts, and permit tax refunds to be credited to overseas bank accounts. All this pertains to NRIs, but it will ease compliance and help a lot of people.
Okay, so then to just sum it up on what at least the personal finance front has in terms of their wish list from the finance minister. One, we want an extension or at least an increase in that standard deduction. We want that. Then we're looking at the medical expenses for senior citizens, that having some bit of increase. And finally, ease of compliance is what we're at least hoping to hear from and iron out those issues that we've faced so far. So that seems to be the bucket list from the personal finance front on what we could expect come 1st of February when the finance minister presents her interim budget.